Hi, good morning everyone. My name is Ram Dhamija. Welcome to my channel. This week has been very tough for Nifty and the markets in general. And the markets have shown signs of cracking now. And it is not a very good news because the selling is now getting onto small caps, mid caps, momentum names, which have started to fall a lot. And we are seeing typical characteristics of a very weak market, like some company comes out with the result and it falls minus 20%. That basically shows that there is nervousness in the market, and market is not holding on to the key support levels as well. So we have seen that how Nifty has broken through the last support at 24,450, and now it is trading in the 24,300 odd zone. That is not a very good news because this support was held on for a long time, and now the support that comes in is about 400 points lower, so which is about 1.5–2% lower from here. And in case of any intraday panic or any intraday sharp selling, these 1–1.5% kind of moves can easily come. So the texture of the market is not looking very strong. I will take you through what are the other things that we need to look out for, and how do you navigate such markets. So let's begin. This is the Nifty chart. As you can see, this is the Nifty daily chart, and these were the three key support levels. First was at 24,450, which we have now broken, and then next is 23,900 and 23,200, and finally the last one, which is where we made the last bottom, which is about 21,760 odd. So these are the three very key support levels, and something interesting happened one day before. So if you see over here, this is 7th of August, which is the expiry day. We actually went down, but we made a green candle over here. Now that was just a pure play expiry play, and it was looking like we have bounced back from this resistance, this support level. But the next day, which was the confirmation one, we have actually broken down. So this is what happens on expiry. There are a lot of contracts. So the expiry day, what do you call, the movements are more dictated by how the contracts are. So you can see over here we were falling, and then suddenly there was a sharp rise. There was no logical explanation for this kind of a sharp up move that you see in Nifty, just so that the next day everything vanished. So this is just all pure play expiry, wherein a lot of calls were shorted by people, and all of them got they were trapped in this kind of up move. So one has to be very careful. The next day was the critical one, which was Friday, and that is where we have seen the confirmation. So it was one way linear waterfall decay. As you can see that we have just gone down. So now we are at 24,340. Also, one more interesting thing is that if you look at the open interest, there were 4 crore calls added on Friday itself, which is huge number. And now with that, the combined open interest stands at about 6.18 crore calls versus 4.18 crores for the first 10 strikes, and 16.96 crore calls versus 8 crore puts on the overall. The PCR of 0.48. I don't remember when did I see last PCR. It's been some months since PCR has been so bad at 0.48. This is not good news for sure. So if anyone has created a short position, they would want the market to go down further so that they profit from it. So calls are being written on every high level. That means the market is not expecting something good coming ahead in the next week or month or so. Month is actually a long time for the markets, but definitely not the next week. Bad news is only expected, I guess. So it is going to be a very tough phase for the market as we go along. But these are the times when markets actually goes through a tough phase for you to build your portfolios, to identify stocks, sectors which have fallen down, because you should look at it like a sale. You are getting something which you would have bought at, let's say, 25,600. Now you're getting it at 1,200 points cheaper. So if you have a keen eye to watch out for, if you have been tracking things, it's not a bad time to start slowly nibbling in. And this is where I also come in handy, and as a help, I'm a mutual fund distributor, and I help people make strong, robust mutual fund portfolios. I handhold people, during such times. I help them as a friend, mentor, guide in terms of identifying which are the strong mutual funds that you can invest in for the long term. Because, one good thing about mutual funds is that they are very reliable, unlike individual stocks. So let's say if an individual company does not do well and there is some problem in mutual funds, that risk is not there because it is spread across 50, 100 companies, and the returns, the fund manager is good, then the returns sometimes also create alpha for you, which is basically they beat the market with a lower beta. So the whole point is that for a retail investor, it makes sense to invest in mutual funds. I, for myself, my own personal investments, most of it is in mutual funds. Though I do a little bit of stocks, but that is more on very, very high conviction bets. If you see my major chunk of my portfolio, my client's portfolio is in mutual funds, and the returns are much, much better. So if you can get a very good CAGR, then why look at individual stocks would be my suggestion. So if anyone is interested, there's a Google form. You can fill that Google form and I shall get in touch with you. It's free of cost, and I can help you build a good mutual fund portfolio. Now let's come back to the market. Something very interesting I wanted to show you. This is the Nifty chart. So you can see that Nifty has broken the 20 DMA, has gone below the 50 DMA. Now that is a very, very bearish sign. The last it happened was somewhere over here. This in 2025 it happened somewhere in December, January, and we know that after that we really had a big fall. Before that it would have happened somewhere over here. This is the fall when it started. This is your September, October fall. So whenever this happens, it's not a good signal. So 20 DMA shot up above the 50 DMA in April, and we saw that it was a good rally after that. But over here there is a movement which is not good. Also, if you see the 200 DMA of Nifty is placed somewhere at 24,000. Now this 24,000 looks like it can be broken now anytime. And one more interesting thing is this is the 6th consecutive week of decline. If you see expiry to expiry, Nifty has declined for 6 consecutive weeks, which is very, very, very shows that the market is very, very dull and without any support. Now looking at Bank Nifty, it is a similar scenario. Again, the 20 has crossed the 50. However, the 200 DMA over here is much lower. It is somewhere closer to 52,600. So Bank Nifty looks like a slightly more better place in terms of strength. But it is also showing signs of weakness now. This is the small cap. Now small cap again, it had a very good rally from April 7th. From 13,300 it went to almost 18,000, which is a huge rally. But from 18,000 now it has recovered, gone down to 16,700. So over here also you can see that the 20 DMA is crossing the 50 DMA, which is not a good sign. The reverse is a good sign, but not this one. And small cap has already hit the 200 DMA. So anything below 200 DMA indicates that the market is in weakness. Let us look at Midcap 150. Again, the same scenario. 20 has crossed 50, and 200 DMA is about 2 candles away. So that can happen any day. And so this is where we are in terms of the various sectors. Now something interesting I wanted to show you. This is the Nifty heat map on Friday. What happened? There were a lot of names which fell hugely, and these names are pretty strong names. Like Bharti fell -3%, Reliance fell -1.5%. So market is facing an onslaught wherever the numbers are not according to markets liking. The script is falling hugely. And if I look at Nifty 500, this is where you will see that there are names like PG Electroplast which fell 20%, Kalyan Jewellers which fell 10.5%. So there have been a lot of these accidents which also keep on happening along the way. Whenever the results are not according to markets liking, the market is punishing individual stock names very, very severely. Now let us look at where the various indices are from their all-time highs. You can see over here that small cap has now crossed the 10 percentage level. It's -10.77. Mid cap is at -7.5, and Nifty is also closer to now 7.5% from its 52 weeks high. Nifty next is the week 1, which is at -16%. The reason for that also is that Nifty next had run up a lot. It had become 2x in a matter of very small time. So it is seeing sharper correction over there. But the biggest hit is coming in Nifty Alpha 50 and Momentum, which is -23% down, and IT is really struggling for a very long time. It is down -25%. So this is the indices level right now. Also, one more interesting thing I would like to take you through. Since last one week we have been seeing severe pressure come in names like pharma, which is down minus 2.7%, MNC minus 1.9%, financial services. So only metals and auto have been able to kind of withstand this onslaught. But if you look at on a monthly level, then everything is down. Everything is down. And if I see which are the sectors which are worst hit, IT is down 10% in the last 1 month, and small cap is down minus 7%. Public sector enterprise, so all high beta names for like small caps, PSE, energy, etc. are down big time, and a lot of it has got to do with this tariff news that has come in additional 25%, which was not expected. Another interesting thing that we see is that FIs have been on a selling spree, though on Friday both FI and DI gave out a positive number, but still we know how severely the markets fell. So FIs have already sold 14,000 crores in the month of August in 1, 2, 3, 4, 5, 6 days itself, and DIs have bought 36,000 crores. Still, it is not sufficient to keep the market afloat. So FI selling, if it continues, it's bad news. Last we saw these kind of numbers was in July, and before that we saw in February, and we all know how markets tanked during these two phases. So FI numbers are very, very worrisome right now. Now coming to some international news, Trump and Putin to meet to discuss Ukraine peace deal in Alaska, which is a good news. Now if this happens, then world markets will recover, but I'm not so sure whether the tariffs that have been put on India are related to this, because they are saying that it's because of Russian oil, etc., but it looks like it's something else. So even if this deal comes in, there is no clarity whether the sanctions on the additional tariffs on India are going to get lifted or not. So till the time that this deal tariff deal is finalized with US, markets are going to be under severe strain. So let us hope that that thing gets done quickly. Now coming to the international cues, you can see over here US 30 years is at 4.8, it is behaving well. US 10 years at 4.2, which is behaving well again, which is fine. S&P VIX is at 15. So S&P is in a Goldilocks scenario. It is just going up like nobody's business. So S&P VIX is at 15, which is perfect. Nasdaq is making all-time highs every day. Every day it is making an all-time high, and our markets are struggling over here. That's not really good. US dollar index is at 98, which is good. Brent oil is at 66. It's just crashing down. It's very good for us. Our currency is at 87.4. Somehow it is holding up. Gold every day making a new high. I had made a video about gold. You can see it on my YouTube page yesterday. So gold every day is making a new all-time high. Silver is making a new high, recent high every day, and Bitcoin is also at 116. So all the indications are pointing towards a good international market, wherein especially the US market is doing very well. One reason also is that dollar is losing its value, and that is coming out clearly in the price of gold, and that's why gold should be a critical part of your portfolio. So gold, debt, equities should form a composition of your portfolio in certain percentage allocations, which is very, very important for your long-term wealth creation. And this is where I also help people in terms of helping them with their asset allocation, how they can optimize it, what are the instruments that they can take. In fact, in the video that I made for the gold thing, there are a lot of suggestions on how you can buy gold. So if anyone is interested, they can see that. If anyone is interested in their portfolio building, they can contact me through the Google Forms below. So that's it from me now. If you like my content, please do subscribe to my channel, and please do like, and please do comment. Please do share the video with your friends, family, WhatsApp groups, etc. If anyone is interested in joining my WhatsApp group, I've given the link over in the description box again. So that's it from me now. I hope the next week is better than this one, though the data doesn't suggest so, but you have to be optimistic and don't waste any opportunity. It's a good opportunity to buy and add to the portfolio. Please do that if you have the capital and if you understand what you want to add. If not, do consider taking help. So that's it from me now. Have a good day. Take care. Bye bye.